Hey everybody, this is George, and let's get back to the main screen there. There we go. All right. Today we're going to go through a number of different things, and really at the end of the day, what's going on is that the real estate market recovery, it's being stymied just a little bit because of the uptick in interest rates. Now, we are only at about 6.3%. However, that's for your conforming. There's lower interest rates for your jumbos and things like that. What's super important to understand is that some of the buyers are starting to pull back a little bit. And again, because of rate, and of course, it affects our monthly costs. So as we go through today's session, if you have any questions, raise your hand. We love questions. We'll get out to you. And in the meantime, let's go ahead and get let's go back there. Let's get everything rolling. Let's get the first slide here, which, hang on, there we go. All right. Remember to like, subscribe, and share. We are the #1 real estate news channel that's going on right now for both consistency, accuracy of message, and whatnot. Let's see here. So new on the market today. Hey, we have 730 homes that came on market. Okay. With that, we have 1,260 homes that came off market, and then 774 that sold. Now, as you can see, we are still close to, for every home that's coming on market, we're taking 2 off. Yesterday, we were at, for every home that came on market, we were taking 3 off. And that has been a pretty consistent pattern since about the middle of October. So we're still seeing quite a bit of activity. We're still seeing a lot of homes coming off market. In fact, what's super interesting, when you take a look at our basic numbers here, and you can see that our number now is down actually 6,970. And you might say, okay, George, what's the deal about that? Well, understand that last year we were, basically, 3,200 homes. Now we're at 6,970. But remember, last month, we were almost 8,000 homes. And the months before that, we were 8,000, 9,000 homes. And then before that, we were 13,000 homes. And as you can see on the left-hand side there, our inventory month over month is down by 12%. However, pendants are up 47.8%, almost 50%. Solds are up 42.3%. And when we take a look at even new construction, in fact, actually, hang on, let's go back one. When we come back and we take a look at the difference between what's happening now and last year at this time, is only 400 homes. Now, you might say, all right, George, what the heck, 400 homes, why is that a big deal? Because that's the entire Northwest MLS. That is more than half of Washington State. That is a really small number. And when interest rates, again, have been ticking upwards, and we're literally twice as high of an interest rate, because last year we were about 3.5, 3.8%. Today we're at 6.3%. Listen, that's double the rate, and we are still seeing some great activity. We're going to go into a Fannie Mae report towards the end here, and we're going to start delving into a little bit of the why and cause, reaction, how to overcome that, and kind of what's the mindset of some of these buyers that we're seeing out there, and of course sellers. And so let's delve back into our number here. Okay, so when we take a look at new construction inventory actually is up just a little bit, not a whole lot. It's about 160 homes. But what's super important, month over last month, we're up 76.6% higher. But year over year, we're actually, for the same month, the same time frame, we're almost 45% higher. When we take a look at it year to date, we have pendant sales are up 16.4%. Oh, sure. When we take a look at the actual, closed sales, those are always lagging. Remember, we're always looking that rear view mirror. It's always behind us. And so it takes a while for those numbers to catch up. So we're going to see some pretty outstanding numbers when we start taking a look at, well, March. When we look back, you're going to say, wow, we did really, really well. And that is our trend. Now, again, mortgage interest rates are going to have the biggest impact on real estate. It did in 2022. It's going to in 2023. And as we are predicting 2024 rates to start coming back down again, it will be, again, a big differentiator in 2024. All right, moving on. Banks, bank-owned homes. Okay, for all those people out there, for some of the lenders that I work with, and for some of the others that we stay in communication with and help with, getting an idea of where things are at. Hey, banks are doing incredibly well. Very, very, very few REOs. There's still quite a bit of equity out there, that sellers are able to sell their home, reboot with some money in their pocket, and then, kind of continue that process and reduce that debt service so that they can, they can sleep at night again and make things a positive way. Now, for investors are definitely, the cash is still king out there. We're still seeing 70% of the homes coming off, the foreclosure list, bought at a sale if they happen to get there before a bank even takes it back. And as you can see here, holy smokes, we have 37 homes throughout half of Washington State. And that's a really tiny number, all right? And we're, again, still one of the greatest sweet spots throughout the United States, as we're still in the top 5. So when we talk about mortgage rates, look at this. So we're at 6.32%. Okay. It has ticked up. Sure. Just a couple of weeks ago, we actually hit 5.8, 5.9. Yes, it's going to go up. Yes, it's going to go back down. We've just had some earnings reports and some inflationary numbers that is now going to be pushing the feds to, instead of kind of hold off on the next one, they're definitely going to raise, the prime lending rate, or what the Fed rate is. Again, it'll affect long-term mortgages, but the feds do not control long-term mortgage rates. So remember that. All right. So super important information. When we take a look at the builder confidence actually has gone up. However, new starts and building permits actually have come back down. Builders have been slowing that process down as they've been seeing, a little bit lagging sales inventory. Not so much in our area, but you're going to see this in some of the other states. Our state, as you saw just from a little bit ago, when we take a look at this one here, we're still doing absolutely dynamic and they are doing well. We're not seeing as many starts, but hey, that is to be expected. Even though we've got, some prices that are quote unquote retreating, we still have seen, a 40%, 42% increase in home values over the past 3 years. Now, is some of that going to adjust this year, whether you are urban or rural? Well, of course. As inflation goes up, as costs and cost of goods goes up, as you take a look at what you used to pay for food today versus, I guess, what you used to pay versus what you pay today, it has all gone up. And which gets into our next one. This is a Fannie Mae report. And it's so interesting because this one and this report right there, what it is basically saying is, hey, listen, straight across the board, everybody's feeling inflation. There's a challenge with being able to save money. Renters, 39% of them are saying, hey, man, I'm having a difficult time even now with rental costs, which have gone up 17% over the last couple of years, and taking a look at the cost of food and other goods. Look, I'm just having the dickens of a time saving money for a down payment. Okay. Well, you need to watch my other videos with how gifting funds does not negatively impact either the gift or yourself, and 7 alternatives to getting a home, which doesn't require you to have money in your pocket for a down payment. There are other options. Make sure you watch those 2 videos. We'll make sure that we post those links for your access. Now, here's the thing. Renters are taking the biggest beating on this. Why? Because it's the same thing here. a homeowner has a fixed cost. A renter, well, they are subject to rent increases. I know this. I own a number of different buildings and understand each year as to maintain what our profit margin is, or what our business goal is to maintain maintenance on the building, and to keep up with rental market and inflation, taxes, insurance, and whatnot. Look, everything has to go up. As a homeowner, that tends to be a lot more fixed. Sure, you're going to have maintenance items. That's a given. Okay. However, except for taxes and insurance, your cost doesn't go up. Yours is fixed. Unless you're on an arm and that arm is exercising, you're fixed. And that is what a lot of renters are looking at and looking for, trying to do. And in fact, when we take a look at the number of first-time buyers that are trying to do this, that number has actually gone down, unfortunately. That tends to also lean us a little bit more towards a recession, which also leans us a little bit more towards the beginning of that recovery, or rip off that Band-Aid. So if you have any questions, hey, make sure that you ask. We absolutely love questions. Like, subscribe, share to the channel. Make sure that if anybody that you know is looking at wanting to buy or sell, hey, just get them into this channel. Tell them to subscribe. There's no marketing here. It's just really, really great information. In the meantime, you guys have an absolutely beautiful day, and I'll talk to you later. Take care.